Oracles. What can we expect from the stock market this week, the week of December 16th, 2024? So, this week is going to be the last rate cut for the year. Now, that is assuming we are going to be getting a rate cut. We will be getting that decision from Jerome Powell and the Fed on Wednesday. Now, prior to that, we are going to be getting the retail sales for November. Now, I don't know how much of this would weigh into the Fed's decision because for them, it's really more about inflation and jobs, but we can definitely glean some information when it comes from the November sales. Don't forget, November is the time that we have Black Friday, we've got Cyber Monday. That's when a lot of companies put out their big specials for the year to try and get those end of the year holiday sales. Now, as we had discussed before, a lot of people kind of spread out their shopping throughout the year now. In the past, Black Friday was that day. They call it Black Friday because that's when a lot of the companies were trying to get their bottom line to the black. So if you're underneath and you're upside down and you're not profitable, you're in the red. You get even, you're black. And then if you go above that, you're in the green. It's not really like that anymore. A lot of companies now kind of get that spread out. Amazon, we see them doing their specials in October. We see people doing specials all year long. And consumers are aware of this, especially with online retail. Consumers see that this is going on and they're saying, hey, I know my friend or so and so would really love this. I see a great sale in August. They're going to go buy it in August and then they'll just put it away in a closet somewhere and then give it to them for the holidays. So it really kind of gets spread out, but we still do see a chunk of selling going on. And obviously, we know retailers out there definitely put all their specials out there. I took advantage of some myself and got some vacations. So you still see those deals, people still buy them, but of course, those specials that are coming out are at massive margin discounts for these companies. So while you might end up seeing some revenue sales going up at that point, you have to remember that the bottom line on a lot of those specials isn't as good. So one of those things to kind of factor in here, but we'll get those numbers coming out on Tuesday this week to let us know how November looked. Now, of course, we still have December to go through as well because December is actually the holiday season. There's a lot of last minute shoppers that go out there. And a lot of these Black Friday specials, you'll see they run them all the way up until Christmas. So you see these specials going out, and while it's Black Friday, those specials actually run for an entire month. And so we still have to get December sales to come in to let us know how the companies actually did for the entire holiday season. So what we're looking at right now is we're going to be seeing the November sales numbers coming out on Tuesday, and then we have the Fed coming out with their potential rate cut on Wednesday. The market is pricing in a 25 basis point cut, despite the fact that we got some jobs data that came in that definitely seems like it was being propped up a bit by the government to show the numbers a little bit better than they were. And we got some inflation that's definitely showing it stickier. Now, we did meet expectations when it came to inflation, but those expectations were set because the market's not expecting inflation to be coming down, which is also a problem. Just because we met those expectations doesn't mean that the expectations that we set were good. So we need to pay attention to that because if the Fed is going to be cutting rates, that's kind of going to open the door for inflation to maybe poke its head back up again. And of course, as we talked before, a lot of people, you look historically when it comes to tariffs, tariffs typically lend to a little more inflation. So if we are cutting rates right now to kind of open the door for inflation, and we have Trump coming in on January 20th, opening the door with tariffs to even more inflation, it could give us a little sign of not so good numbers next year, inflation going up, and then if Doge is going to come out and do as they plan and cut a lot of these jobs that were created in the government, we could see unemployment going up and we could see inflation going up, kind of giving us that perfect storm for a recession next year. Now, a lot of people have asked me why I think we're going to get a recession next year, and that's exactly it right there. That data point right there and the timing of this all and how this is going to all play out, I think it's going to lend to a potential recession of next year. Now, obviously, nobody knows what's going to happen for sure, but just kind of taking a look at the trends and the direction that we're going, understanding what Trump and Doge are planning on doing next year, kind of leads me to believe that we're going to be getting to that position. And even Elon himself came out and said, hey, expect it to be painful. Now, they do plan on transitioning a lot of people from the government by paying them maybe up to 2 years of salary and helping them find other jobs in areas that are actually going to contribute to the income of the government. So that could kind of help us out in the long run. And maybe we end up getting some unemployment data where people don't have jobs, but they still have income. So it could still kind of help the GDP a little bit. A lot of things that we need to kind of play out over the next year, but still looking at the fact that we could get inflation going up and unemployment going up for those two reasons could lead us to that recession. And with the Fed potentially cutting rates this week, it could kind of just give us that indication that, yep, we're heading more in that direction. Now, later on this week, we are also going to get the PCE data. PCE data is the preferred inflation report that the Fed likes to look at. So we'll get that at the end of this week as well to kind of give us an indication again of, hey, is inflation ticking up? What's going on? Is it flat? Are we coming down? Because we were coming down very nicely, and then we kind of got stuck. We didn't really get to where we want to be. We really want to be in the twos, solid across the board, and we're not really there yet. We're pretty close, but we're not there yet. So seeing these numbers kind of slightly ticking back up again and stalling out are not giving us the sign that inflation is completely squashed. Although it has been subdued, you don't want to take the pressure off of it, because if you do, then it could come back up again. Sort of like Hulk Hogan coming back at the end of a fight. He's all beaten down, then all of a sudden he gets this energy back and comes up. You don't want to give them that opening, and we don't want to give inflation that opening as well. So the Fed cutting rates could end up leading to that. But we also want to make sure that unemployment doesn't go up much higher. And you kind of want to spur unemployment, especially if Doge is planning on cutting a lot of jobs next year. So one of those things, just the Fed is trying to balance very precariously, and they're doing what they can do to balance this. And we'll just kind of have to see how it's going to end up playing out. Now, some other data that we're going to be getting this week is going to be from earnings, and FedEx is going to give us their earnings this week. The reason FedEx earnings is important is very much like UPS. UPS and FedEx, they kind of give us this indication of how the health of the economy is doing. If people are doing a lot of shipping and things, especially this time of year, then you're going to say, all right, the economy is healthy because people are spending and they're willing to ship things at the more expensive rates. What we had seen from UPS and FedEx previously were a lot of people were still shipping, but they were going with the, hey, I'll pay a little bit less and make it take a little bit longer to get there type options. They're not paying for those premium options when it came to shipping and deliveries. And that is an indication that it's not as healthy of an economy as we think it is. So we just kind of want to see how this is going forward. And FedEx will give us an indication of that. And again, as I said, looking at the holiday season, when you've got FedEx coming out and saying, hey, we see a lot of traffic coming from the holiday season, that's good. So between retail sales and FedEx, we can kind of get a good understanding of what's going on for the retail sales and the economy for this holiday season. Because if they're looking weaker than expected, you can expect the market to potentially sell off as well, because hey, the economy is not doing as well. It's not as strong as people thought it was. This holiday season is turning out to be relatively weak. We could see a sell off. Conversely, if we see FedEx come out and say, hey, we've been busy as heck over here, we've got a lot of these packages that are going out, everybody's paying premiums on all of this stuff, we see a stronger consumer right now, that could bode well for the market. And then the Fed cutting rates could be like, all right, this is good. The economy is doing well. We can safely cut rates and we'll be comfortable with that. So this week, despite the fact that we're getting close to the holiday and there's not a lot going on elsewhere in the economy, these pieces are going to give us a very strong indication as to how the entire economy is doing coming into the end of this year, and how we can kind of set ourselves up to go into next year. We understand a lot of what Trump plans on doing. Now that we see the foundation set for what the economy is looking like right now, on what his policies can do to affect the economy right now, whether it's going to be for the better, for the worse, whatever it's going to be, we can get an understanding of that. Now, I've said it before, I do think that initially in the near term, what he's going to do is going to cause some issues in the economy and the market. That's why I think we're going to get into a recession. I think they're going to be aggressive on what they're going to do. And it's going to be no different than like when it comes to a company and they lay off a whole bunch of people. And you've got a lot of people in the company who are still there doing twice the work. And it's very strained. And the revenues may come down, but the bottom line comes up. And there's a lot of stress going on. But you kind of get yourself a stronger foundation. And then from there, you found that strong foundation. And then you can build up and grow from there. And you'll learn a lot of ways how to be more efficient going forward. So as you grow, you can take those efficiencies with you. And as you grow your top line, your bottom line will grow even larger from there. That's kind of what they're planning on doing for the government as well when it comes to GDP. I mean, right now we can barely even pay off of our interest on all the loans that we have, let alone actually pay off the loans or pay our debt down or whatever it is. We are on an unsustainable path when it comes to the government. So they need to do something drastic to cut all the spending that's going on. And in the meantime, when that happens, as Elon said again, it's going to be painful. So we could see that recession take over. But once we've hit that ground floor and we've got ourselves into a more efficient place, we can then build up from there. And then all those jobs that took out of the government and they put into privatized businesses, then you can take all of that money there. And now it's going to be tax money coming in. That's now more revenue coming in for the government. And the government's bottom line is going to be even stronger because they're more efficient. So now, as far as business standpoint goes, when it comes to the finances of the government, you're going to have much more revenue, a healthier bottom line, then you can start paying down your debts even faster. And then we come out of it an even stronger economy and an even stronger market. So again, the near term pain could lead to an even stronger long term growth. We just need to go through that near term pain first. And I think that's going to end up coming in 2025 and maybe early 2026. Kind of depends on how long it's all going to be playing out. But I think that's what the timing is going to be when it comes to the market. And we'll get a lot of that understanding from what's going on this week in the market as well. So, those are just kind of my thoughts for what we're looking at long term, what I think is going to transpire. And again, I think we're going to be doing very well long term, but the near term timing of all of this is why I've been doing what I've been doing with my portfolio to have this cash flow coming in and have this cash stockpile to take advantage of any possible opportunities we're going to see during this transition, going into what could potentially be a more efficient government and see a stronger market going forward from here as well. So that's all I've got for you guys today. Let me know your thoughts in the comments below. What do you think is going to happen this week? Do you think the Fed is actually going to be cutting the rates 25 basis points, or do you think the Fed is going to pause? Let me know your thoughts. Thank you guys so much for watching. I appreciate all of your support. Have a great one.